So let's start with the news that actually created all the noise. The headlines everywhere was that Motilal Oswal AMC pauses fresh inflow into the Nifty Microcap 250 index fund after discussions with SEBI. And suddenly panic mode was on. I got so many screenshots of portfolios in the last few hours, people asking me, should I sell? What should I do? And honestly, I want to be very clear here. I do not know why you personally entered into this fund. I do not know your time horizon, I do not know your risk appetite, and I'm not your personal financial advisor. So, how can I give you advice to buy or sell? So, what I can personally do here is today, I will calmly explain to you what exactly is happening, what can happen going forward, and what were the red flags that already existed in the past so you can think logically instead of emotionally. So, before anything else, one big disclaimer, please do not compare the situation to things that it's not. This is not a Franklin Templeton debt fund crisis. This is not a credit risk fund default. This is not a winding up of scheme. And this is not an AMC solvency issue. Motilal Oswal AMC is financially sound. This decision is about managing product level risk, not about business being in trouble. Very, very important to know the difference. Now let's talk about the returns because that's where honestly most of the emotions are coming from. In the very first year, this fund gave stellar returns. The NAV literally moved from 10 rupees to 19. That kind of numbers caught everyone's attention. And let's be honest, I'm sure a lot of you jumped in after seeing those returns without fully thinking about the risk that actually comes with micro caps. This is human nature. When the returns look exciting, risk feels invisible. But markets don't move in a linear straight line. After the rally, profits were almost wiped out, and right now the NAV is closer to 15. So, if you entered late, your experience has been very different from those early investors. And now, on top of that, in 2025, the returns were negligible. So emotionally, I know it feels like you took so much high risk, but you did not get those kind of high returns. And that's exactly why many investors are annoyed, anxious, and disappointed right now. Now, what has actually happened? The AMC has stopped fresh inflows. That means no lump sums, SIPs, STPs, or switch ins. That's it. The scheme is not closed. The scheme is not being wound up. Redemptions are still fully allowed. You can still withdraw your money. NAV will continue to be declared daily like normal. So, why was this done? Because microcap is not a SEBI recognized market cap category. So when SEBI consults or questions the structure, it's like a preventive risk control step, not a panic reaction. This move is about slowing growth, not signaling danger. Now let's talk about the red flags that were already there. I remember very clearly when this fund was launched, Mint had flagged few concerns. Microcap companies are basically that fall outside the top 500 category by size, and the very first biggest challenge there was liquidity. Most microcap stocks trade very little on daily basis. Average volume is 5 crores maybe a day. Now imagine a fund becoming 1,000 crores. Even managing a small portion in stocks can become really difficult without moving the prices. Today, the fund is already 2,600 crores in AUM. The second issue is tracking error. In microcap index, the rebalancing is very high. Stocks keep moving in and out of the index. When that happens, the index fund is forced to sell many stocks and buy new ones. And in microcaps, a large part is also called free float, right? The shares. It is actually indirectly controlled by the promoters, which again make execution very difficult. So what can happen in future? The big fear that everyone has is that if investors redeem heavily, can there be a freeze? Theoretically, yes. Practically, right now, the probability is very low. Let's be realistic. Risk does exist because, microcap stocks are illiquid. Large selling pressures can move prices sharply, increase tracking error, and force AMCs to sell at very poor prices. That's the nature of the segment. But why is the freeze still very unlikely? Because the fund is around 2,625 crores, not massive in market-wide terms, right? The microcap segment is volatile, but it's not frozen. Stocks are listed and trading. And most importantly, the AMC acted very early by stopping the inflows, which actually reduces the imbalance. This step lowers the probability of a freeze. It does not increase it. Now the big liquidity question does arise in terms of panic selling. Yes, it has reasonable liquidity to handle normal panic selling, but not without short-term pain. This fund invests only in microcap stocks, which are naturally illiquid and often hit lower circuit during panic. If many investors redeem together, the fund will first use its existing cash, then dividends. Then it will sell its relatively liquid microcap stocks, and then it will move on to the other funds. Because AUM is about 2,625 crores. The microcap universe is large, redemption can be met as long as selling is staggered. During sharp panics, some stocks may hit circuits that slows down the exit, that will cause the NAV to fall faster because of forced selling and impact the cost. That hurts returns, but it does not mean that your money is stuck. Circuits can delay liquidity, they do not eliminate it. So yes, liquidity is enough to survive the panic, but NAV volatility in short term and underperformance can be a part of this deal. Can investors actually be stopped from withdrawing their money? Short answer, extremely unlikely. Long answer, only in very rare cases. Under SEBI rule, redemption can be restricted only if there is a market-wide liquidity crisis or trading is suspended in large part of the portfolio. None of these conditions exist today. This is not a debt fund liquidity crisis like Franklin Templeton 2020. This is not a credit event, and this is not a winding up notice. Now, one more question that I personally have, that can this fund be merged with a small cap fund? Maybe it can be done, but there are stricter conditions. SEBI will have to approve it. The investment objective will have to change to fit the small cap definition. Investors will maybe have to be given a clear exit option without maybe an exit load, and if the change is material, maybe unit holders need to approve it. At the end of the day, this is a high-risk microcap product, behaving exactly like a high-risk microcap product. The fund is not broken, money is not stuck, but expectations were set by early stellar returns, not by the risk reality. If you didn't sign up for the volatility, breakdowns, and the patience of microcaps, you were never meant for it. So let's see what actually happens on Monday now.